How to create an expense in QuickBooks Online fast. I'm going to show you two ways, one with an expense and another with journal entries, okay? And I'll talk about the advantages of each one. Here we go. We're going to go new. We're going to go expense, okay? Right there. This is for like a single expense to the same vendor. All right. So in this case, let's say that we paid Books by Bessie. We paid them from our checking account. The payment date, let's just say it's the 23rd of April, 2025. Payment method, let's say we used a check, and let's say our check number was 199. Very well. Tags, don't worry about it. Category here, do we have books? We're in the test drive account. Actually, yeah, Books by Bessie, this is for a bookkeeper. So we will choose this. If you want to add a description, monthly bookkeeping fees. By the way, if you need monthly bookkeeping fees, hit me up, link in description. Amount is going to be, we'll say $450 per month. And the customer, don't worry about that, okay? Here we go. We're going to save and close. All right, cool. So if you go to expenses now, you'll see in the expense center, is what I'm going to call this, our expense is lodged here, whatever you want to call it. Great. So we can see all of the expenses right here, okay? You can also see the total of all the expenses. If you go to your reports, you can go to standard reports, go to your profit and loss, and you'll see this reflected on your profit and loss for that year. So if we look for books, oh, we don't have it. I think it was actually legal, something like that. Here we go, bookkeeper. All right, 505. So if we click on this, we can see the expense that we just made, and it is right here. Okay, that's great. Now, what actually happened? If you click on here, we can investigate a little bit further what happens when you create these expenses. If we go to transaction journal, we'll see that the expense account was debited, and the asset account, if you paid for it with like a checking account, that was credited. It might also be a credit card that you paid for it with, which would be crediting a liability account. But suffice it to say, here's our two sides. We debited the expense and we credited, in this case, the checking. So that's great. Now, there's a limitation to this. If you want to do another transaction for this same day to a different payee, there's no real way to do that. Because if you come here to expense, you can see you can only add one payee in here, right? All right, so that's one limitation. Here's another way to do it with a journal entry. If we come here to journal entry, and let's say this time, yeah, sure, we paid on the 23rd. And let's just say, what do we want to buy? Let's just say we want to pay for disposal fees, and it's going to be $300, and it's going to be waste removal. Okay. Here we can choose our vendor, and I don't know who it's going to be, but let's just say Hall Properties. Okay. Now the advantage of this is we can add another one here, and we can say this is, who do we want to say? We'll say that this is for travel. Okay. And no, we want to always debit the expense here. So we'll say that this one is for $9.99. We spent a lot of money on travel. And this was a cruise or something like that. Okay. Oh, we got to say business cruise. All right. Name is going to be, we scroll down here, and we can say, I don't know why, but we need a vendor. Let's just say Robertson and Associates. This is a travel agency. Okay. And now then we've got the debits. We've got to credit something. Let's say we did all of this on the credit card. We paid for it with a credit card. So we can go MasterCard, okay? And there we go. It automatically calculated the sum of this and put it against the credits. This is, you don't have to put anything here, okay? And you don't need to put anything in the name either. So here we go. We're going to do save and close. Now, if we look at our profit and loss again, first of all, expenses. If we come to our expense center, you'll note that that is not here. The journal entry is not shown in the expenses, even though we just logged two expenses, or we debited two different expense accounts, right? So this is a limitation of utilizing the journal entry. It's not going to show up here in your expense center. However, if you come to reports, standard reports, and we go to profit and loss, you'll see if we look at travel, $9.99. So that journal entry did book the expense onto our profit and loss, and that's kind of the most important thing. If we also look, what was the other thing that we did? I don't recall what the other one was, as a matter of fact. what was it? It was disposal fees. There we go. This also got on our profit and loss. So that's great. And if we were to look at our balance sheet, we would see the other side of these transactions. So if we come here, the first one, we used our checking account, right? So we should see that expense. I'm going to come to the bottom, Books by Bessie, bookkeeper, $450, right? So when we credited the asset account, the checking account for the first one that we did, basically the expense that we made in the first go round using this expense right here, kind of one advantage of this is that you don't need to think about where the credits and the debits go, right? If you choose this is what it's going to credit, okay? And this is what it's going to debit. But you need to be careful about that because if you don't have your head around this and you choose the wrong categories or you choose the wrong payment amounts and you don't really understand what's getting debited and credited, you could make mistakes. So there's trade-offs there, right? Okay, and then the other journal entry, it credited the MasterCard. So if I search here for MasterCard, there's our MasterCard, and I choose this here. What do I see? If I come all the way to the bottom, I see our journal entry here for $12.99. So that's good. Again, both of these methods worked. They debited our expense accounts and they credited the balance sheet side of things. In the first case, it was crediting our checking account. And in the second case, it was crediting our credit card. And of course, when you credit a bank account, when you credit a liability account, it's going to drive the balance up, right? Which is why if we come here, we take a look at this, or I'm sorry, drive it down, we'll see that it reduced our bank account, right? Because we credited the bank account. The opposite is true when you credit a liability account. So our MasterCard here, if we choose this, we will see that that credit actually increased the balance. But of course, increasing the balance of a liability is similar to decreasing the balance of a bank account. You know what I mean? Because you're kind of like losing money in each case. All right, we won't dwell on that, but I think that's it for now. If you need my help with other things, you can check out the other videos. If you need my help as a bookkeeper, click on the links in the video description. And there's all kinds of assets and stuff on my website. So I wish you the best. And hey, until next time, be the best.